Ask George Costanza. There's never a good time to have shrinkage.
Well,
All right.
here's one that's shrinking pretty good, Pete.
Yeah.
Charles Schwab.
Yeah.
Now, this one fell, just so everybody knows. March 8th, the stock was $76 a share. Fell all the way down to $47 a share on March 10th. Why? Because there was a run on the banks. And some people viewed Schwab as perhaps not having enough liquidity either to meet the withdrawals that might come from their customers. Well, turns out Morgan Stanley says that clients were pulling cash out of Schwab's low interest bank accounts at 2 times the rate that Morgan Stanley expected. And for that reason, they downgraded the stock. First time since they began covering the stock 7 years ago, Pete. So that's kind of scary. And that's why Schwab is down, today better than 5%.
And Schwab, let's be honest, is kind of that blue collar world, right? And so a lot of those folks are not happy about what's going on. They want to get something better than what they feel like they're getting now, and whatever concerns they might have. Morgan Stanley, as you said, has that downgrade, John. How about $20 billion a month is what they're pulling out of this thing right now? I mean, those numbers are big, even for a Schwab. Those numbers are pretty daggone big. It's something that I think is concerning, and that's why I think that you're seeing the reaction out of the stock. I do think at some point, John, this is probably going to be a buyable sell-off. It isn't just yet, because I think there's still enough news out there, newsy news, that's going to get people out there with the palms out and the nervousness and everything else. But I think there will be a time. Now, it's right around in those 50s right now, I think, 52, 53 bucks, something close to that. If it gets back into the 40s that you were talking about, which we had during some of the more of the panic time just a couple of weeks ago, I think that would be a level where I might start looking at it a little bit. But we do have to see some of those flows slow down a little bit, and that's not something we're seeing yet.
Yeah, and I think this is one, Pete, where they do have a good franchise and an awful lot of money under, if you want to call it management, because they have a bunch of imitators. They imitate the Vanguard, they imitate the SPY, they imitate a lot of things, and they do it for really, really cheap. But when people are afraid, they go out of those and they more or less go into money markets. And if they don't really trust the balance sheet of Schwab, they pull their money out. And just like you say, $20 billion leaving that company like that happens time and time again. People are a little scared, and that's a reason to maybe be soft rather than going in and saying, well, it was 76. I should jump back in here at 53. Maybe not so fast.
Want more from Market Rebellion? Don't forget to like and subscribe, and learn more about options trading at marketrebellion.com.